We've seen some wild moves in small to mid-cap companies over the last month. Let's talk about it with Eric Kuby. He's the Chief Investment Officer at North Star Investment Management. Eric, you've been on the show quite a bit over the last couple of years, and some of your companies have gotten caught up in this rocket ship style market over the last few quarters, basically. So walk me through what you're doing with them right now. Your fund is up. It's up more than the Russell 2000 by about 20 percentage points. So are you taking profits? Are you sticking around in these names? Walk me through it.
Yeah, well, great seeing you, Oliver, again.
Thank you.
Be better in person, but here we are. Yeah, so we try not to sell. We're buy and hold investors, and so as a general principle, it takes extraordinary movement for us to be, motivated to take some profits. That being said, last week we did have some opportunities that we couldn't avoid selling. Some of our 1-800 Pet Med Express, which was up 60% one morning. I mean, there was Pitney Bowes that was up 100%. So we sold some of our positions in some of the stocks that were like rocket ships, and scaled down some of our big positions that we're running as well. But again, we're trying to stay invested and trying to not get caught up in too much action in this craziness.
Let's check out the chart for pets as an example. I think this is a good one. Eric, this is such a bizarre move. To your point, you liked this company before, you took advantage of the spike. Now that it has retraced a good deal of that, what do you do now? Is it an opportunity to get back into the stock, or do events like what we just went through kind of fundamentally change the price action?
Yeah, no, great point. I mean, we would certainly be considering buying back the stock we sold. I mean, this is a stock we've liked for a long time. I don't really understand the short interest in the company, which has been there for like a decade. People have found one reason or another to hate this company that has a great brand name, great customer, great balance sheet, really good model, inexpensive stock. So. Whereas, when it was $50 for a cup of coffee, we did sell half our position. I mean, my expectation is back down at these levels, we'll be buying it back. Okay.
So, Eric, that's one example. Now, it's also a company that it kind of hits some of these trends, right? Pets right now have been really popular. Everybody's seen Chewy. Everybody wants to know what the next Chewy is. That was kind of some of the GameStop narrative, that GameStop with the Chewy co-founder was going to bring out a different model itself. How much do you look at these companies, Eric, and kind of have belief that new leadership can make those changes? I know this has been GameStop specific, but you speak a lot with your CEOs of the companies you own. Does that narrative ring true to you? I mean, is there hope for a company like a GameStop with a new leader?
Well, that's a trick question, because I don't think there's hope for GameStop versus where the stock price is. I think that maybe there's some hope with new leadership that they can save the business, but obviously what's happened there, is way beyond the actual business fundamentals. But your point is excellent. And again, if we look at our big winners over the last 12 months, sort of specifically, 3 of them are really driven by new leadership that came into the company. That would be Turtle Beach, CarParts.com, and Orion Energy Systems. All 3 of them, like a big part of why they've worked so well is because they got fantastic new leadership that came into the company. So leadership is important, for sure. Okay.
Eric, some of the stocks that you're still in that you like, that you do see as having reopening potential if the economy gets back to normal. One is ACCO Brands, ACCO. I don't think we've talked about this one before in your list of stocks. It sells school supplies on a wholesale basis to the schools.
Well, it's a very, very more robust company. They actually have almost $2 billion of sales annually across the globe, and they're on every continent. They own the top #1 brand name in a lot of office and school and art supplies, computer peripherals. Again, I think a really good management team. Stock is trading at probably a single-digit multiple with huge amount of free cash flow. And their business has been fine. It's a stock that no one pays any attention to. But again, they have had a headwind. I mean, the headwind has been that the office supply business has been challenged because the offices have been closed. And so I think that they'll get a bump in business on top of pretty good business, when people do go back to the offices. So ACCO brands at single digits, we think is a really, really good buy. Also has a nice dividend. Okay. So we like that quite a bit.
What about Build-A-Bear Workshop? Let's go to another one. Eric, this stock, did people confuse it with Bed Bath & Beyond, or are they both in malls, so they're basically the same? I mean, the chart looks like some of the other ones, right? Right. What happened here?
Yeah, so I think Build-A-Bear is my sort of like one of my favorite undiscovered reopening stories because they do have most of their stores are in malls. The malls have been closed, but nevertheless, I mean, this is a crazy thing about Build-A-Bear is that they're still profitable. They have about 25% of the stock price in cash. It's trading at about 30% of revenues. They've got an incredible online presence that they've developed over the last couple of years. That's growing very, very rapidly. And the thing is, besides the malls, everything that everyone's excited about, whether it's cruise ships or theme parks or water parks, they partner with all those industries. Movie theaters, also a big deal for Build-A-Bear is when there's movies that are out, they get the licenses, from Harry Potter and Disney. So there'll be more product. So I think this is one that when the world gets back to normal and there's reopening, they're going to just win in so many different ways. And again, a stock that's really very, very inexpensive. So we like it as a cheap stock with a lot of upside.
Well, it's right back in the trend now for all of the crazy volatility. It's actually up 1.5% today, and it jumped in a huge way from $4.80 to $8.40, and now it's right back to $4.95, which has been well within this steady trend higher for the stock. Eric, appreciate the details. Always like to check in on the company. It's always interesting picks. Thank you for joining us.
All right, my pleasure. Thanks, Oliver.
Thanks a lot. Eric's the Chief Investment Officer at North Star Investment Management Corp. His fund is up 50% to the Russell's 30 over the past year.